Good morning, Professor. We're Group 5, and our topic is the concept of reverse mortgage, and you can see our team members here. So we'll first have the introduction of the reverse mortgage, then we will talk about the model of reverse mortgage that we have done, and we'll also have the conclusion in the last part. The reverse mortgage is the derivative of the aging population problem in Hong Kong. Many statistics predicted that by the 2030s, nearly one quarter of the Hong Kong residents will be aged 65 or above. Within the elderly population, there are subtle changes in their socio-economic characteristics, and meanwhile, the percentage of the family that never get married or the couple without child is escalating. But before Hong Kong, actually, the Netherlands was the first country who developed the reverse mortgage because they have encountered the same problem as well. Actually, the US was another example, and because of the special characteristics in the US, the reverse mortgage loan came into the society and gradually became an excellent financial product for many elderly home housing owners. And come back to Hong Kong, the reverse mortgage loans was first introduced in 2011, and with an 8 years evolution, different kinds of plans can be offered to the target customers. More than that, the US can be regarded as one of the most mature and representative countries of the housing reverse mortgage scheme. And our project objective is to investigate and provide a feasible and practical reverse mortgage model for the house-rich cash-poor older peoples in Hong Kong. And in total, we have 4 specific objectives that we would like to achieve. The first one is to discover the principle of reverse mortgage model and identify some basic assumptions, while the second one is to design the model of callable reverse mortgage plan by floating rate as well as the fixed rate, while the third one will be to conduct a quantitative and comparison analysis between these two methods, and while the last one will be to draw a conclusion through a series of evidence and analysis. Reverse mortgage is a kind of contra loan arrangement that private real estate is used as a collateral for monthly payment. The corresponding financial institution shall comprehensively evaluate the borrower's life expectancy according to their age and health status, present value of the housing estate, and the future value of the property after the borrowers pass away. After evaluation, estimating loss and advance interest according to the value of the housing and distributing the value of the house in average according to life expectancy of the borrowers, the cash is paid to the borrower by the company on a monthly or annual basis until the borrower passed away. It allows the insured to use the sales of the house in advance for the rest of his life. The borrower has the right to reside and be responsible for maintenance fees while obtaining cash payment by the insurance company. When the borrower dies, the corresponding financial institution inherits the property ownership, which it can sell, rent, or auction the property in order to repay the principal and the interest of the loan if the successors cannot pay the loans. Meanwhile, the corresponding financial institutions also enjoys the proceeded appreciation of the property, which means that the mortgage property receiving annuity. The whole operation process is a kind of reverse the mortgage business, which the financial institutions purchase the house from the borrower in installments. And here comes to the pros and cons of the reverse mortgage. First, the reverse mortgage can relieve the government's pressure on social security and alleviate the serious shortage of pensions. The elderly can obtain a fixed income to maintain and improve their retired life without selling the house. Since more elderly is able to support their own life, the Hong Kong government is more capable to allocate the resources for the underprivileged. Besides, the government can also seize the opportunity to consummate the welfare system in order to achieve the social stability. While the second advantage that bringing the concept of reverse mortgage can gradually change the money-saving habits of the elderly. The concept of buying flats is an investment rather than a consumption will be established. The scheme not only stimulates but also boosts the domestic demand and promotes the growth of national economy. Furthermore, it can enhance the healthy development of the real estate market. The introduction of housing reverse mortgage can effectively activate the real estate secondary market and increase the listing of second-hand housing, which can effectively alleviate the current supply and demand contradiction in the real estate market and effectively curb housing prices. The soaring property prices issue is more likely to be alleviated. While the last advantage is to encourage the diversification and change of the business of financial institutions such as banks and insurance companies, and also enabling the financial institution, especially the insurance company, to closely integrate social responsibility and profitability goals. Hong Kong is a cosmopolitan city. While it has the most robust financial foundation, the large diversity of financial products has long been a unique advantage among the world. Hence, keeping the product diversity is the key to retain the competitiveness of Hong Kong. On the other hand, there are quite a lot of challenges before applying the reverse mortgage. There are three main uncertainties. The first major uncertainty is the age prediction. In Hong Kong, generally, the average life expectancy is assumed to be 18. The age prediction obstacles encountered in house reverse mortgages mainly come from two aspects. The first one is the moral hazards of the borrower, indicating that the healthy elderly who expect to live longer will have a more willingness to apply for the mortgage. With this phenomenon, the prediction of life expectancy, which is predicted by the lender based on the life table of the ordinary life insurance company, prefers to be low. Another one is that the commitment period of reverse mortgage loan is usually long. Chances are that there are some medical breakthrough which can extend the human life expectancy and eventually lead to the increase of the lender's payments. While the second potential threat is the uncertainty forecasting in interest rates. Inflation is a normal social phenomenon and it's always hard to forecast when it comes to the far future. Regarding the current tension and the economic situation over the past 2 decades, it is difficult to predict the economic situation of Hong Kong in the coming 20 years, which increases the lender's risky rates. The uncertainty in future housing price also poses a potential threat to both the lenders as well as the borrowers. It is not difficult for us to find that the property price in Hong Kong is keep fluctuating. Indeed, this is the most uncertain among the three major uncertainties. Generally, the price of housing is determined by the income of the citizen and economic situation of the city, but now more factors came into the real estate market which reduce the accuracy and credibility of the future forecasting results. The reverse mortgage insurance premium is divided into the two parts. The part 1 will be the upfront mortgage insurance premiums. So in this part, we use the 1.96% of the specific property value, which is payable by 7 annual installments starting from the 4th until the 10th anniversary. And the annual installments is calculated at 0.28% of the specific property value under the reverse mortgage loan. While in the part 2, which is the monthly mortgage insurance premium, is payable on a monthly basis at the annual rate of 1.25% of the outstanding loans amount. And the next part, we would like to introduce our model. And actually, the whole blueprint of the reverse mortgage program is relatively complicated, and different companies may utilize a different model to analyze the program. As a result, we stimulate a simplified version of the program with the following assumptions. There are 5 assumptions in total. The first one, we assume that there is a single borrower of the reverse mortgage loan, which age over 55. The second one is 3 different choices of for the loan period, 10 years, 15 years, and 20 years, are provided, and suppose the borrower can live longer than the loan period. And the third one is that we assume the borrower will not change its program plan during the loan period. The fourth, we ignored all kinds of service fee, like the handling fees or consulting fee and legal fees. While the last one is that we assume that the borrower has no need for lump sum payouts at any time during the loan period. And here we come to the next part, which is the property value computation. So the first, we would like to introduce a basic concept of the appraised property value, which is the value of the property pursuant to the preliminary valuation conducted by the HKMCI. Another term is the specific property value, which is a figure in multiples of Hong Kong 10,000, which by default equals to the appraised property value. And in the following computation table, you can find the different appraised property value will lead to a different maximum amount of specific property value. And you can find all the figures here. And the next part we would like to introduce will be the two different types of the reverse mortgage with different rates. The first one will be the floating rate, while the second one is the fixed adjustable rate. And in the matrix we're going to introduce will be the payment term, which is the 10, 15, and 20 years, against the age of the applicants, which is 55 and 65 and 75 years old. And in this matrix, we can discover that if the payment terms is longer, the rates with the same age will be larger as well. And horizontally, we can find out that the floating rates will increase when the age of the applicants increase as well. And for the next part, we will briefly introduce the reverse mortgage program model formula. However, if you want a more detailed version, you can reach to our report as well as the Excel we submitted to you. So in the following parts, we are going to introduce some basic concepts, like the principal limit factor, which is to calculate by the specified property value times the principal limit factor, and we can calculate the principal executive value. And you can take a look at the amounts of the monthly payment, that how we calculate, and as well as the monthly mortgage insurance premium, upfront mortgage insurance premium, as well as the upfront mortgage insurance premium in the future as well. So here comes to our last part of the presentation, which is the insights and conclusion. The older you are, the higher the principal value your property is, and the next point is that depends on your own loan period. You can choose what kind of rates to get more returns, and the higher the property value and the longer the loan period, which generates the larger amount of premium. The insurance premium is accumulated yearly, so it has the same trend with the loan amount. The relatives need to repay the loan and the interest which accumulates in past year to redeem the property. So actually, the HKMC has promoted the program for long. However, the application number of this program is depressing, which is around 3,000, and the application rate is dwindling as well. And in the foreseeable future, we hope that the figures will increase, and more and more elderly people can enjoy the benefits by these derivatives, and they can rely on themselves, but not the Hong Kong government. Thank you.